Coming up now, we have a fireside chat, starting with Geoff Garrett, a distinguished international political economist and LinkedIn influencer. Geoff is also the dean of the USC Marshall School of Business. Geoff arrived at USC during the summer of 2020, following a 6-year term as dean at the Wharton School at the University of Pennsylvania. Geoff's vision for Marshall focuses on the school's vital role developing students who can capture the unlimited opportunities presented by business today. Geoff was also a popular professor here at USC. He taught international relations, business administration, communication, and law from 2005 to 2008. Geoff will be interviewing David Marcus, a lifelong technology entrepreneur who has spent many years reinventing payments globally. In May of this year, he founded and became CEO of Lightspark, a company that is building core infrastructure supporting the Lightning Network. Most recently, he led all payments and crypto efforts at Meta, aka Facebook. He ran the Facebook financial division, handling payment services, as well as for WhatsApp Pay in some countries. In 2018, at Meta, he also started Diem, formerly known as Libra. David was also president for 2 years at PayPal. His company, Lightspark, they're still in stealth mode, so we're delighted to have David here today to share a little bit about his vision for the new protocol for money on the internet. So let's welcome Geoff and David to the stage.
David, it's great to see you on stage. I think the history of this session began when we had lunch near your new offices in Culver City a few months ago. So I want to drill down on Lightspark and how you're thinking about disrupting the payments industry. But given everything that's happening in the world, and we were just backstage listening to Kathy and her colleagues talk about the markets, I think we should start with your big picture reaction to FTX.
Sure. And first of all, thank you for having me here. I'm really excited to be here today. Yes, it's been a pretty rough week for anyone in this industry, just because it's been after a series of bad events, bad actors, bad players in the industry that are tarnishing basically the image of the industry in general. And I think FTX was no exception. It was the series of fairly irresponsible actions that created a situation which is a little bit like a hybrid of Lehman Brothers and Bernie Madoff, basically, which is never good. Right.
That's not a good combination.
Not a good combination. No. And I think, look, I feel like we're going from a place where crypto was kind of a nascent thing to becoming a much more mainstream product and service. When you think about Coinbase, it has over 100 million active accounts. And so that's a lot of people trading in assets. And I feel like U.S. regulation is actually protecting consumers in a fairly good way, but we still need to come up with clearer regulation that will protect consumers, that will enable this market to actually flourish without the massive speed bumps and issues that we're seeing. But I also think that we're moving from a phase or an era in this industry where we're going from speculators to builders. And I like that a lot more, personally.
So that is a great segue to what you're up to. And that last point of speculators to builders, I think, is just a profoundly important observation because 99.9% of the public attention is about speculation in tokens, whereas I think probably what's true for a lot of people in the audience, it's true for you and for others, is that the builder side, you building stuff on the platforms is where the game is. So let me start with my crass rendering of what you're up to, and maybe we can unpack the elements. So you've got in your sights the payments industry broadly understood. You think Bitcoin is a stable asset that can become not just a store of value, but a unit of exchange. But you also acknowledge that Bitcoin processing is too slow, so that's why we need Lightning Network. So we have those three concepts. What's wrong with the payments industry? Where does Bitcoin fit in, and how does Lightning help you? Is that a reasonable way to think about your enterprise?
Yes, and I think it might be helpful if you'll allow me to rewind a little bit and go back to what we tried to do from Facebook with Libra/Diem and how I came to the conclusion that Bitcoin is the only way to get something of the sort done. So we started at Facebook with the idea that if you're building a product or a protocol for money on the internet from a company that reaches 3.5 billion people every month, then maybe you can convince the rest of the industry to adopt it as a protocol for money on the internet. And we tried. It turns out that it's actually really, really hard to disrupt and build new payment rails from a company that was less than popular at the time.
With an instrument that was less than popular, and so my sympathies to you to having to sit in front of congressional inquiries and things.
Yes, that was a lot of fun. But look, it was worth a try, right? It was worth a try, and there are two actually really good teams building from the technology that we built at the time, building layer one blockchains out there. So, you know, it hasn't been in vain, but it was worth a try, and I've learned a lot. And one of the things that I've learned in that process is actually that we need, for a protocol of money to exist, you need something that is leaderless. So there's no person, group of company, consortium, or surface of attack, so to speak, on which you can build. And the only network that actually fits the bill for this is Bitcoin, because there's nothing like it. Every single other protocol has a visible leader or a group of people who are running and controlling the fate or the destiny or the direction of travel of the protocol. It's not true for Bitcoin. And we believe that the world really needs a protocol for money on the internet. I mean, we're still transacting on infrastructure that was built in the 50s and 60s for the most part.
Okay, so that's to get to the payments industry, but let's dig in a little bit on your view on Bitcoin.
Mm-hmm.
So leaderless, decentralized, finite, I presume those are all important things, but if we're talking about commerce, we need something, we need a unit of exchange which is relatively stable. Do you buy what is now feels like 5 years ago or so critique of fiat money, that if central bankers are in control of money, they've got to be beholden to national economies, etc. And therefore, if you actually think about the future of payments, it requires something that's not tied to central banks and not tied to countries. Is that important to you, or some other thinking?
It's a great question, and the answer is no. It's not important to us, and we believe it's actually counterproductive to approach the problem with this angle. And it was never, by the way, even when we were doing what we were doing at Facebook, it was never our intention to actually fully replace existing fiat currencies. We were just trying to create a digital form of money that would basically be divorced from the archaic rails that support traditional payments. But I think that when we look at the problem right now, we're thinking more specifically about the rails. And how can you build real-time, very low-cost, interoperable, open payment rails that work 24/7 for everyone to build on, and that can enable people and companies to move value around the world in a super seamless way. Because the world deserves this, needs this. It doesn't exist today. And
okay, so but you don't think central bank-backed digital currencies could play the role Bitcoin will play?
So I think the problem is actually that there are two topics here. One is the unit of account, and one is, what are the capabilities, the network that is actually used to transport the value. I'm personally focused exclusively on the latter and not the former, because I think that people should be able to transact with whatever they want. And I think the conversations around central bank digital currency, or CBDC, has always been a matter of pride for many central bankers and governments, but it eclipsed the actual real conversation that needs to happen. It's actually, okay, fine, you have a digital dollar, a digital euro, then what are the rails that are going to enable faster, better, cheaper, open 24/7 payments? Because a digital version of a currency doesn't solve for that.
So, okay, so now let's talk about the rails. So I think I shared with you my frustration with the SWIFT system when I was living in Australia and holding some US dollars and trying to move money across countries, which you'd think in the modern world would be a seamless and costless entity, but it's anything but that. My understanding is you also think that's true for interbank and inter-financial institution payments in the ACH system. Could you talk about a little bit about your diagnosis of what's gone wrong and what the opportunity is in the whole world of payments?
Yeah, sure. So an analogy I use very often is basically that the payment systems today and the payment networks today look exactly like telecom networks pre-internet era. You have a bunch of companies that have access to the underlying transport network. Back in the day, it was like for phone communication and texting, where we used to pay $1 a minute for an international call and 25 cents per text message. And no one had access to that network. Only telcos had access to the network. And the same is true for payment systems. Basically, you search and replace all telcos with banks, and you have what currently exists in our world today. But now it's been a while since the internet was invented, and it feels like a giant anomaly that there's no protocol for money on the internet, and you still rely on these networks that were built literally in the 60s to move money around. And so if you're not familiar, by the way, with SWIFT, which moves a majority of the interbank payment volume, it's basically a messaging system. You're actually not moving money. You're basically sending a message to another bank saying, hey, I'm sending you $100 for this account, and then the bank on the other side would reflect the value, but the money hasn't moved. And then it's batched, processed later, etc. ACH is even worse. It takes 3 days for a payment to clear, which I can understand why a 3-day free float might be appealing to some players. But the reality is it's actually ridiculous that money moves this way today.
And neither of those institutions, SWIFT or ACH, is a government entity, right? They're these weird sort of quasi not-for-profit alliances of legacy players who agree to a system. Is that the right way to describe it?
That's a really good way to explain it. Yeah.
Okay, so in that sense, it makes it easier for you to take them on because you're not running into a governmental institution. It's something that's sitting outside the formal, those formal administrative.
Yeah, and I don't know whether the right frame is that we want to take those on. We just want to build a dial tone for money on the internet. So enable you to move value from point A to point B in the same way that you're going to send an email or a text message, and do it in a very cheap, open way that enables also other companies to build on top of this network to basically unleash an era of innovation for money and payments that we believe is really going to be important for the world.
Okay, so, and then you like Bitcoin is because of its unique properties. We haven't talked anything about Lightning yet. So the criticism, obviously one insider criticism of Bitcoin is that processing is too slow, too cumbersome, too energy intensive. And now we have this technology that promises a quantum leap in the speed of Bitcoin processing. Could you sort of get us under the hood a little bit there of what the promise of Lightning is when it comes to transaction speed on Bitcoin?
So basically, if you go back to the 2009 Satoshi Nakamoto white paper for Bitcoin, which I first read in early 2011, I'm like, oh, this is like, too geeky even by my standards of geekiness. and I'm just going to not pay attention. And then I came back to it in late 2011 and fell into the rabbit hole that a lot of us fell into. But the premise was peer-to-peer transaction system. So the ability to send money without a central intermediary between two entities or two people. And that was a revolutionary idea. The issue with the evolution of Bitcoin is actually that right now it's not used for that purpose. Like the initial purpose that Satoshi Nakamoto, whomever he, they, she is, wanted was actually payments.
Yeah.
And it's not happening because layer one is actually fairly slow and fairly expensive on Bitcoin, despite the fact that it has amazing properties of being the most decentralized, leaderless blockchain in the world. And so in comes Lightning, that has been invented by two people, one of them working with us. We're lucky to have Taj working at Lightspark now. The idea is basically you build a payment protocol on top of Bitcoin that enables you to open payment channels. And the more participants are on the network, the faster it becomes, the more scalable it becomes, the better it becomes. So it's actually the inverse reality of the typical scalability issues of computer science, where you have more people on the network and then you're constrained. This is actually the opposite. Like the more people, the more endpoints are on the network, the faster, the better, the cheaper it gets. And so what we want to do, and what we've been spending time on, is actually can we actually make Lightning easier to use, to onboard? Can we actually make it enterprise grade? Can we enable more players to actually use it as a protocol to move value around on the internet?
And so the promise of that's incredible. What's the order of magnitude speed up that you think is possible?
It's actually infinite on Lightning. So the scalability is infinite. So basically, the more people, the more scalability, the more routing capability, and the faster it gets, because you're actually going to find a route through other people's channels much faster than you would if you have fewer people on the network.
So this is qualitatively different from an Ethereum proof of stake, proof of work change. Could you compare and I mean, if that's a big deal, what are the similarities and differences with Lightning?
Well, to me, the big deal is actually that because it's built on Bitcoin, and for me, Bitcoin will forever be the most trusted decentralized store of money and value. You have trust in the system that, if you're in a payment transaction with another party on Lightning with a channel, you can close the channel, you know where your funds are, you know that it's actually secured by the most secure blockchain that has ever existed. And so I think that, to me, the difference between Bitcoin and all of the other things that exist in the world is that there's just no other protocol that is going to ever, in my opinion, be better at decentralized money than Bitcoin. And then you can have all kinds of other layer ones for Web3 applications and decentralized compute and all of these things, which Bitcoin I don't think will be. And so it has this singular application that makes it best in class for money, and that's why we decided to build on top of it.
And you just speed up the flow, the transaction flow.
That's right.
Any implications for energy use? I mean, it was obviously the big pushback against Bitcoin was energy intensity.
So this is actually a topic that could be just the subject of a full-on panel. I have a different view on the general narrative that proof of work is all net bad, right? I mean, no one, first of all, is arguing that Amazon Web Services is consuming too much energy, or that Google is consuming too much energy, and that's because people understand that there's a utility in Amazon, there's a utility in Google services. And so the first part of the problem is actually, if you believe that Bitcoin serves a purpose and actually enables people to be self-sovereign with their money, have access to digital money, move around value around the world in a seamless way, which wasn't possible before, then you assign value and utility to the actual use case, so you take that out. And then, there are a number of ways that proof of work is actually accelerating the transition to renewable energies. And you can see it in a number of places where Bitcoin miners are working with energy companies to basically absorb excess energy produced at times it's available and ramp down mining when the energy needs to be put back into the grid. And people really understand, the understanding of energy is really not great. People think that whatever energy you produce, you can actually store infinitely and then distribute. It's not true. The vast majority of overproduced energy gets dumped in the ground. So I think there's a use case for responsible Bitcoin mining. And then as far as Lightning is concerned, it's actually great because if you take the load off layer 1 for these important transactions, then those can be carbon neutral and run in a very efficient way. So that's actually net positive for the network in terms of energy consumption.
Okay, fantastic. So in a couple of minutes, I want to ask you about trying to build a company in this environment. But bonus topic, you've recently moved to LA. I know you're into the creative economy world. When you and I have talked about Web3, we've basically thought about these two paths. One path is the DeFi path, but the other one is about supporting the creators of IP and allowing them to monetize their IP. So it's not your day job, but could you share with us a little bit your vision for empowering creators through blockchain? How close are we to that? What's the path?
So I would split the question in two parts. The first part is actually enabling creators to create and distribute in novel ways and changing the way that people have ownership over digital assets. And I think, with NFTs and others, and I think, by the way, NFTs right now is kind of a reductory kind of term that is basically just a JPEG attached to something. But I think, ultimately people will own their houses as an NFT, and they have the title of properties.
Or their university degrees, of course.
Yes, that too.
Yeah,
that too. I think every credential will be an NFT of some form. But back to the creators, I think that there's one part where you need platforms that enable creators to actually distribute their content in a seamless way. But then you also need to pay them, and they need to get paid. And that's where I think also Lightning and Bitcoin can play an important role. Because if this is the best way to actually pay people, even small amounts in real time globally, then it's going to be a great way to invent new creator monetization models that will allow for things that can't exist today because of the limitations of the current payment systems and various other constraints that we have.
Yeah, so combine that with smart contracts makes a lot of sense. But a vision of moving NFTs from Bored Apes to music to movies or whatever it is, right? Has that not happened because the number of bits required, for a movie is a lot more than a Bored Ape, or something else? I mean, why has the NFT world, at least from my perspective, stayed pretty self-contained?
Well, I think there are definitely limitations in terms of what you can put on a blockchain in terms of size and everything else. But I think that it's really important when you're a builder, and many in this room will end up joining things or starting things and building in this new exciting industry of ours. And I think it's really important to keep in mind that whatever you're building has to solve a real-world problem. And I feel like in crypto, we've kind of lost our way at times because speculation took over.
Yeah.
And it consumed a lot of cycles. It's, I don't know how many people actually wanted those little JPEGs attached to an NFT versus speculate because they think they were going to make a profit. And I think at the end of the day, you need to solve real-world problems. The blockchains today, the way that the existing mainstream ones, the Ethereums, etc., are very good at keeping track of what you own. They're not good at storing high fidelity large scale movies, for instance. Like, it would be a very bad application for it. And so I think the problem is, what are the problems we're solving? And you can dissociate the ownership of a digital asset with the way you consume it. And I think there are a number of companies that are building in the space. So I think that over time, you'll see these applications come to life.
Yeah, and the music companies, the movie studios are a lot like the payments industry, right? They're pretty old economy, and they take a piece of the action every time. They clip the ticket every time there's a transaction. So let's now move to your world as an entrepreneur. You're building a crypto company in crypto winter. Tell us a little bit about the pluses and minuses of that. I presume there's a lot of talent.
It's amazing. It's the best time. Seriously, it's amazing. It's like, we're fortunate enough that, we're, very well funded, so we have the means of our ambitions. And that it happens at a time where all of the other shiny objects that are other companies to work at are, really not that shiny right now. And so it's a great time to hire the very, very best people, to build the best team in the world to actually go after this unique opportunity we have in front of us. And because we're not building something that is so tied to speculation and trading and the prices of assets, we don't really mind that, we're in this little crypto winter, actually. It enables us to focus on what matters, which is solving real world problems with the solutions that we're building. And, for like-minded people, engineers, product managers, etc., who want to work in an exciting company now in LA, this is a shameless advertisement.
Hey, we had to get to the shameless pitch. So
yeah, it's a great time. It's a really great time.
So okay, so you're in a position where which you've earned clearly that you've got a lot of capital, you've got a lot of dedicated capital. If you look out at the industry, have you been surprised by the carnage higher interest rates have caused? I mean, we both listened to Kathy talk about, say, it's not the absolute quantity of the increase, it's the relative increase in interest rates. Have you been surprised by the impact interest rates have had on tech? You've been in tech for a long time. Are you surprised by that?
Well, it's kind of a double whammy in tech, right? So you've had like 2 years that were fueled by a massive, massive change of behaviors, where basically the spend fuel mix of consumers have moved from I'm spending on experiences and things and going places and traveling and going to restaurants, doing all these things, to now I want to buy stuff, and then government gives me money, and so I take that money, I buy things. And so all tech companies, not all, but most tech companies have been on this high of COVID. That was the double whammy of the change of spending mix and money and stimulation generated by the government, to a place where, actually now I don't want to buy anything anymore. I just want to travel and live my life because I've been locked up for 2 years. And rising interest rates, which calls for all the liquid assets to be basically liquidated, because you now have a good alternative to put your money in government bonds, right? So this was a brutal rotation, and of course tech and crypto have both been affected by this situation, which is, it's really pretty remarkable to see how aggressive the governments in general have been in stimulating the economy during COVID and hitting the brakes with both feet on too late, and then we're in the situation we're in. No surprise.
Yeah, when the history is written, I think there'll be a lot of second guessing of the COVID stimulus, which was 4 or 5x the financial crisis, and was that the right move, is obviously something that's going to, and we'll have to debate it for a long time because it's going to have such big impact. But what you just said about the big tech companies reminded me of a conversation I've had with several people who've led companies that cornered the market. There's also this problem that when you become ubiquitous, you can't keep growing. So you're now distant from this. But if if you're thinking about where Facebook and Meta are, there's a finite number of people on Earth, and when you've got almost all of them, the public markets still seem to want you to keep growing. How do you think about that world for the big mature players that have massive market share of markets that have got to be finite at some level?
Well, I think that yes, they're finite in terms of the number of people you can reach, but they're not so finite in terms of the number of use cases and businesses you can build on top of these platforms. I mean, to some extent.
So you're an advocate of the meta move?
Yeah, I mean, generally speaking, I think these companies have a lot of runway, and not investment advice, but I feel that this sort of tech winter as well is also teaching a number of companies a lot of rigor, which they didn't have because they didn't need to. They were blessed with a phenomenal business model that was continuing to enable them to continue to hire too many people and to get a little bloated. And I think this phase that is teaching all of these companies rigor and a better way to operationalize things is actually going to, I think, pay dividends down the line. So I'm actually pretty bullish over the long run of what these companies can do and can still produce. And honestly, a company that still reaches nearly 4 billion people every month, has a lot of things it can do with that, I feel.
So that's a great place for us to end. The programming today is so rich. We have to exit the stage. I don't know whether we're exiting stage left or stage right, but we're exiting. David, what you've done and how you're thinking about the future is just incredible. It's been fantastic to have the opportunity to this morning and on other occasions for me to get to know you a little bit and learn what you're doing. And certainly, as somebody who lives in LA and works at USC, it's fantastic to have you in the local environment now. And I think David did ask. He had a call for interesting talent to try to find him at Lightspark. So thanks a million, David, for joining us today.
Thank you so much. Great to be here. Thank you. Thank you.